Dow Jones drops 90 and hits a new bear market low. More worries about Citigroup and Bank of America, plus Hewlett-Packard's weak forecast pushed the Dow below its November closing low, and jobless claims also weigh on stocks. Stocks tumbled today again, with the Dow Jones Industrials hitting a new 6.5-year low. Unconcerned, the government will be forced to take over some of the nation's biggest banks. In other words, nationalize the banks, as well as weakness in technology stocks. The pullback came as new economic reports have expanded the picture of falling domestic and global economies that they say will likely take years to recover. The Dow Jones closed down 90 points, or 1.2%, to 7,466, its lowest close since October 8, 2002. The low reached after the bursting of the dot-com bubble and the September 11, 2001 terror attacks. The Dow's decline also produced a new bear market low for the index since its October 2007 market peak. The old closing low was 7,552.29 on November 20th. Its intraday low is 7,449.38, set November 21st. The Standard & Poor's 500 index was also off 9 points, 1.2%, to 779, its lowest close since November 20th. The Nasdaq Composite Index also dropped 25 points, 1.7%, to 1,443. The pressure on stocks came from weakness in technology giant Hewlett-Packard and banking stocks, which were battered again today on worries that new federal regulatory standards might force the government to take control of some banks. Again, in other words, to nationalize the banks, wiping out shareholders in the process. There is great frustration with the Treasury's lack of detail so far on its plans to fix the banks, and that's given short sellers carte blanche to drive financial stocks lower. And there's also resentment about the Obama administration's plan to rescue homeowners struggling with their mortgages. Citigroup was off 13.8%, and Bank of America was off 14%. General Electric, which trades like a financial stock, briefly dropped below $10 for the first time since 1995. The Standard & Poor's Financial Sector Index fell to 100.67, its lowest level since December 1994. More signs of the times. And once again, there's something bigger than all this going on here. The Dow Jones finish raised fears, but the U.S. stock market will continue to drop, to keep dropping ever further down the spiraling downward next big test for the market is whether it can hold. At today's close, the Dow Jones is now down 14.9% this year already, or so far, and 47.3% since peaking on October 9th, 2007, almost cut in half. And it's down already 14.9% for this year, and the year has just begun. Once again, these are more signs of the times. The S&P 500 is off 13.8% for the year and 50.2% from its 2007 high, cut in half and even more. The Nasdaq is off 8.5% this year and has fallen 49.5% since October 31st, 2007. That's a lot. And the woes for the U.S. market have plenty of company. It's a worldwide economic crisis, a recession, or possibly becoming a depression, because it is a worldwide economy now. Japan is also down. Their market is down 56.7% from its 2007 high, and is now flirting with levels last seen in 1982. And meanwhile, there were two more disappointing bits of economic news among all the other bits of economic news. The Labor Department has reported that approximately 627,000 Americans filed initial claims for unemployment benefits just last week. That is a lot also. The number was unchanged from the previous week, which was revised upward. Continuing claims for unemployment hit a 27-year high, rising by 170,000 to 4.98 million, approximately almost 5 million for the week ending February 7th. Unemployment is rising rapidly. The Philadelphia Federal Reserve Bank's report on manufacturing activity in the Mid-Atlantic region came in at a negative 41.3 for February, surprising economists, and marking the lowest reading since October 1990. And now, this is the market in the time of extreme stress or distress. In the meantime, rising crude boosts energy shares. Yes, crude oil is going back up. Energy stocks are mostly higher, as crude oil closed up $4.86 to $39.48 a barrel. An Energy Department report on oil supply showed an unexpected decrease of 200 million barrels last week. And crude oil is up more than 5% this week, helped by increasing evidence that member nations of the Organization of Petroleum Exporting Countries are sticking to their agreement to cut production by approximately 4 million barrels a day. Still, the price of oil has tumbled approximately 75% since the closing peak of $145.08 a barrel in July 2008. The recession is real, and this is a worldwide economic crisis, and in turn, all this is connected to the end times, transition days, and these are more more signs.